Hey guys, Akil Stokes here, and welcome to another episode of the Trading Blog. It is Thursday, January 19th, and I'm having a fantastic day. It was a great day in the live room with our traders as always, and just finished up sitting in a leadership meeting. We do a leadership program over at the university that's close to me called Deliberate Success. It's hosted by a good friend of mine named Bob Vasile, who's all about empowering, motivating, inspiring, and we're doing a series of presentations talking about how to become successful on purpose and kind of changing the mindset and putting yourself into a confident place where you can make success happen. So that's always pretty cool. Maybe one day we'll be able to bring it to you guys on a larger scale. That's something that's in the works. But that's it's fun stuff, and I love listening to him speak. But today was not the best day of trading. I took one loss on the euro yen, but overall it's been a very good week, a much needed, very good week, especially if you've been following me for my blog this year. I started off pretty poor, but had some really big winners this week, which I'm happy about, and starting to dig myself out of that hole. We have a long way to go, but it's great to see the ball start rolling in your direction. Now, we had an interesting conversation in my live trading room today. It was a trader who brought up the question of, he said, "Hey, Akil, I have this strategy that I tested. It's based on moving averages. The results are pretty good. I only have one problem. And that one problem is the strategy doesn't really line up with my philosophy about the markets." And this trader, his philosophy deals with structure leaving clues, the importance of support and resistance levels, stuff like that. And the moving average strategy doesn't have anything to do with that. And he was just wanted some feedback, some input on whether that was going to be a problem. And that's always a tough one. And a lot of it is going to depend on really how disciplined you are. There are certain people out there that are very, very strict discipline. It doesn't matter if they believe in something or not. If they're given rules and told to follow those rules, they will do it 100% of the time. They won't look back. Boom, there it is. Most of us, however, are the exact opposite. Most of us have trouble with discipline, trouble with handling emotions, especially when live money is at stake. And the only way to put ourselves in a position where we really know we're going to follow our rules day in and day out, time in and time out, trade in and trade out, if it's something that we really believe in. I've mentioned this before in the past, the belief, actions, results cycle. You believe in something, it causes you to take the right actions. Once you take the right actions, you get the right results. Once you get the right results, you believe in it even more. And the problem is, if you're trading something you don't believe in, it's going to be very, very hard to take those right actions. Before I traded the style that I do now, I started off trading a mechanical system. It was a system that dealt with moving averages and indicators, and it was a very successful system. Structure wasn't taken into account at all. It was stops and targets for both volatility based, so they're based off the ATR. And I did my testing on it. It was a very, very good strategy. However, there was always a problem with it. And when that strategy hit a drawdown, I would always question it. You know, when a trade would go against me, I would say, oh man, well, if I would have had stops above structure, I would have been safe. Or even a trade that would say go in my favor and then hit a level of support, my stops were, or my limits were right under support, and it would bounce up, and I say, oh man, I should have took targets off that structure, because if I did, I would have banked some money on this trade instead of breaking even, or instead of losing money. And essentially what I'm trying to say is, every time the system didn't go in my favor, I would question the system because my beliefs were somewhere else, because my beliefs were so strong in structure and the market being gravitated towards those levels. It always bothered me when I had a stop or a target that was maybe right above or right below those levels, because it was kind of like a conflict in, I don't want to say personality, a conflict in systems, right? When in one hand, my belief on structure is saying this. On the other hand, my belief in following the strategy or the system is saying this, and they would butt heads. Very similar to you guys that know my story about why I'm not a trend following trader. I tried that as well, and it was very difficult. And that's tough. You got to make the decision. And one thing that I told the trader is, hey, there's two ways to handle it, right? Either you can be 100% disciplined and accept the fact that you're going to have to go against kind of what you believe in, which can cause trouble. But at least that's something you can work on, or you can make adjustments to the strategy. You can either, essentially you can either adjust yourself to the strategy, right? Adjust yourself to the strategy, or adjust the strategy to yourself. And that's going to vary person by person. Me personally, I would rather do something that I trust, something that I believe in, because I know that I'm going to execute it day in and day out. I know that when I'm going through a drawdown, something like earlier in this year, I know that I'm not going to panic and turn my back on my system. I know I'm going to stick with it and trade myself out of it and see the new equity highs, because my belief is so strong. If your belief isn't that strong, there's a good chance that you'll make an excuse, you'll bail, and then you'll be right back to square one. So we can go on this topic for days, I feel like, but that's, I guess, kind of a quick answer to the question. I want to bring it to you guys because many of you guys are in that situation right now where you're just testing a lot of different stuff. You're looking at internet strategy over here, internet strategy over there. You're not really doing something that matches your personality. You're just doing something that will make you money. And I'll tell you what, there's an abundance of strategies and systems and techniques that can make you money in the market. That's not the hard part, right? Making money is the easy part, right? The hard part is the discipline, is sticking with it, is not sabotaging yourself when things get tough. And of course, not getting too greedy as well, I guess, when things go good. So you always want to make sure that you're grounded, or what you're trading is grounded in your belief. So that's it for today's trading blog, guys. I won't see you tomorrow. My trading week is done. I've got to head up to New York City tomorrow, but I will be back for the Forex market preview over on our Trade Empowered site this Sunday. And of course, please do me a favor and vote for me for Forex Trainer of the Year. I've been bugging you all week about it, but I'm falling behind in the race and I need to keep up. So I need your support. I need you guys to get out there in numbers, support, vote each and every day, and do me a favor. Share that message with another trader. Say, hey guys, this is an awesome trader. Go check out his videos. If you like it, give him a vote. We're going to try and win this thing, but we're going backwards right now. So let's step it up, guys. So until then, plan your trade your plan. Take care, traders.